Hello everyone, this is Alexander Nikolov from trendrecognition.com. Today is September 9th, 2010. It's 20 minutes before the US markets close. It's 21:40 Central European Time. It's 20 to 4 p.m. New York time. Today I'm going to take a look at the currency market and let's do some brief trend analysis for the major Forex pairs. Let's start with euro-dollar. This is the daily chart of euro-dollar, and you can see here the trend is down. The major trend is down, but the most recent trend is probably a sideways consolidation that has begun from the May 2010 low. Euro rallied strongly in May, June, and July, but then topped out in late July, early August, and has pulled back since then. So our guess is that some kind of a sideways consolidation is unfolding here. Where's the support and resistance levels? Where are the key levels here? Well, as for resistance, you can see that major resistance here on the daily chart is near the 129.20 level, and major support here is the most recent low around 126 area. So the euro has been trading in this tight range for the past 2-3 weeks, and this range of course remains intact, but the current pressure is on the downside because, as you can see, the prices are firmly below the 100-day moving average, also trending around the 21-day moving average. So a move down is likely to be seen in the next couple of weeks. Once the 126 support area gives way, is penetrated, then a decline toward lower supports. Here you can see the 124.70 area, also 123.50 Fibonacci level, and of course the key level on the downside is 121.46, and then comes the of course the May's low. So a decline sometime toward the 121.50 level is expected in the next several weeks once the current sideways consolidation ends. Of course, if the euro manages to break above 129.20, a rally toward 131, 132 area will become likely, but ultimately, again, we would expect a move down here. Going to the hourly chart, here you can see that from last Friday's top, there was a strong decline on Monday and Tuesday earlier this week, and then the euro has been trading sideways in a very tight range here with support at 127.60 and resistance at 127.60 and support at 126.60. So very tight range here. Break on either level, on either side, will likely produce a sizable move in respective direction. So the trend on the hourly chart is on the downside, as evidenced by the fact that the prices are firmly below, not firmly, but below the 100-hour moving average, and this long-term moving average itself is trending down. So the major focus here is on the downside. Let's go to GBPUSD chart. Here's the trend on the daily chart. Is as we defined in our short-term analysis, it's a weak uptrend because there is a series of, as you can see, of higher highs and higher lows. The most recent decline is still above the most recent low here, and the prices are above the 100-day moving average, which itself is slightly trending higher. So weak uptrend here. Currently the immediate pressure is on the downside as the prices are just below the 21-day moving average, but again above the 100-day moving average. There is a buy signal developing from the daily stochastics, so maybe we should see a move higher here. What are the major support and resistance levels? Well, major resistance is seen at 156. Before that, there is a minor level at 155.20. Yesterday, the pair briefly broke above 155 level, but then returned back below it. So it's still stuck in this congestion area here. And of course, potential support is the most recent low at 153.20, 153 and 30. So our bias is slightly on the upside. If an upside breakout is seen from this consolidation move toward 160 level will be seen, but of course one should respect that the immediate pressure is slightly on the downside. Going to the hourly chart, you can see that here the trend is clearly sideways as the prices are moving sideways around the 21-hour and 100-hour moving averages. Those are the key levels here. Actually, the key level on the hourly chart on the upside is slightly below. It's 154.90. It was penetrated yesterday, but there was no follow-through buying. So actually, the pair then quickly returned. So the bias here is absolutely neutral, and I don't see any evidence now to support either a bullish or bearish breakout of this range. So we should be patient to see which way the market will choose to go. And finally, going to see the trend on the dollar yen chart. This is daily chart. Here the trend is on the downside, so one should respect it. All the money is likely to be made by playing shorts here. So for now, because the trend is still strong, the market is near the 83.80 support. I thought that if this support was broken, a downside acceleration was likely towards if we go to the weekly chart, toward the next significant level far below at 78.04, so far below. But so far there was no downside acceleration here. The trend is of course down, and one should respect it. Key resistance here at close to 86 level, and support just around most recent lows. So the trend is lower. There is an obvious loss of downside momentum. You can see this triple divergence on the daily MACD indicator, but still the trend is down for now. And on the hourly chart, weak downtrend here, prices below the 100-hour moving average, but in small sideways trading here for the past couple of days. So as long as the resistance at 84.10 holds, caps the upside, the downside pressure is likely to resume, but there is also strong support here at 83.50, so we need to penetrate this level in order to see downside acceleration. So that's all from me for today. I hope this helps, and everybody has a good trading.